Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are going over the weekly candle close, the short-term price action, the possibility for a continuation higher, and the risks of any short-term pullbacks. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in VIP with nearly 700 members. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chats, our trading chart and education chat, our help, our news, our daily video, and our trade setup chat. If that is what you're interested in, you can contact me in the pinned comment of the free channel by clicking my name or these links for more information. The VIP channel has been around for 40 plus months, so you can find our entire trading track record right in there. Check it out and let's dive in. So as we can see, in 2 minutes time, and by the time you're watching this video, the weekly candle will have closed for Bitcoin. Objectively, the weekly candle was bullish. We saw a bullish engulfing candle from a low price of around about 54,600, closing at and around 59,200. So a very fantastic week for Bitcoin. Bitcoin definitely saw a strong move toward the upside. However, it did not see a strong enough move to facilitate that positive momentum shift on the weekly. We're going to be discussing what that means in today's video. We'll also be diving deep into the short term, going over the recent short term correction, the current trend we are in, and the key levels that you should be paying attention to, answering the questions whether or not Bitcoin is going to see a rally up into that 61.3, potentially even higher, or are we going to see a tumble back downwards? And we'll be jumping into the macro charts and a lot more. Starting on that market data, the 24-hour volume and liquidations, let's take a look at how that is developing. 24-hour volume is up 27%. At 80 billion, that is expected as we come out of the weekend, and 24-hour liquidation surging 173% to 123 million, with 102 million coming from long liquidations, the majority of that occurring within the last 12 hours, and 20 million coming from short liquidations. Looking at the price action of Bitcoin on the short term, we can see Bitcoin did not sustain above this short-term horizontal support level we developed at around that 59,200 to 59,400 region. We saw a flash liquidity grab into this VRPV gap. However, we do still have this major uptrending support level we are sitting above, which again is going to increase the likelihood of a continuation rather than a breakdown while we sustain above that. So the liquidity grab has occurred. Is it over? Will we continue down, or are we going to see continuations upwards? We're answering in today's video. Moving over to the market data and the DXY, taking a look at the DXY starting on the daily chart. We can see we have opened up red for the day. Of course, the DXY is still sitting well and truly underneath this broader symmetrical triangle formation. While it is underneath this symmetrical triangle formation, the expectation is that the DXY is going to see extended continuations toward the downside, potentially as low as 9.93 and 95 on the DXY. So some pretty significant corrections possible here on the macro scale if we do drop any further. And the point of which the DXY will need to drop below to actually activate these continuations lower will of course be this horizontal base of support. This is a 1.5 year long support level sitting at a price point of 100. So a complete round number, the psychological level, that 100 mark. A drop below 100 will facilitate an initiation of that macro downtrend continuation. Until then, it is acting as an area of support. The direction of which the DX line does move is going to heavily depend on the interest rate data coming out in 2 days and 17 hours. At the moment, there is a 50-50 probability in regards to a 25 or a 50 basis point reduction. There is a 100% probability we are going to see a reduction based on expectations and forecasts. As we know, macro price action in regards to risk assets is going to see a rise in regards to falling interest rates. Now, this may not happen immediately, but we know on the macro scale that falling interest rates weaken the dollar. A weaker dollar overall results in higher asset prices, as again asset prices rise in comparison to the cost of the dollar. We also know that falling interest rates results in decreasing debt to service ratios and decreasing costs of debt, which not only goes to increase available household cash flow for retail, but also increases the debt acquiring power these companies have to acquire cheaper debt and then use that debt to buy income producing assets, which bolster the risk asset market. So we do know on the macro scale the implications of falling interest rates. If we see continuously falling interest rates month on month over the course of many months, will eventually result in a stronger asset market and a weaker dollar. Now, that does take time to play out. It is not immediate. So we know that if we do see interest rates continue to fall for the many months following, we are likely or more likely to see the asset market rise. Moving over to the S&P 500, we can see the S&P 500 is looking fantastic. A nice daily, or should I say a nice weekly open over here, currently looking green. We do need to break above this major point of resistance at 5,700. This is going to be our weekly high. We've got our weekly low over here. A break above our weekly high will result in continuations upwards to around 6,000. A break below the weekly low, as we can see, this horizontal level will result in a high time frame downtrend. So below we have high time frame downtrend. Above we have high time frame uptrend continuation. That is as simple as that. Let's go ahead and jump into Bitcoin. A quick word from today's video sponsor, BitGet, BitUnix, and BingX. If you want 15% off your trading fees for life, sign up to the links down below to BitUnix, BitGet, and BingX. You can do so with the links below. You'll get a hefty sign up bonus and 15%. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back in. So as we can see, the weekly candle has just closed, and it closed at a price point of around 59,140. It didn't close high enough to facilitate that weekly breakout on the RSI we have been hoping for, we have been looking for to occur. It has not done it. This RSI trend line now is still intact. This resistance is still going, and this trend line has been spanning the course of just under 200 days for Bitcoin, a representation of the momentum during the last 200 days of price action, which is of course our macro descending channel formation. Now, we have talked many times of the importance of a positive momentum shift and how that a breakout on this weekly RSI downtrend could facilitate and will likely result in a continuation upward to retest the range high of this channel formation. We can look back in history for Bitcoin at many instances where we've had similar momentum shifts. A prime example using the last consolidation period would be this macro RSI downtrend, which spanned the course of roughly around the same period of time. This, of course, was just under 200 days, at around 182 days, a little bit less than the current downtrending consolidation we have been in, which is going to be our macro descending channel. We had a horizontal consolidation. What we saw over here is upon the breakout on the weekly of that RSI downtrend, which happened right over here, in the next 2 weeks following, we saw an eventual breakout of the range high of that consolidation. We can see how that the RSI in this instance was a leading indicator for the price action to follow suit. We are expecting a very similar reaction in this consolidation as we are in an inherently bullish consolidation. A descending channel formation, as we know, is a downward consolidation, but it is a bullish consolidation, a representation of decreasing bearish strength, or if we would call it bearish exhaustion, increasing over the course of the consolidation. And we can see that with the price action, and we can see that with the momentum flattening out as we approach the apex point of this consolidation. So we can say with a degree of certainty and confidence that if we see a positive momentum shift here, we are very likely going to see that act as a leading indicator for what is likely to occur for Bitcoin next, which will be a continuation to the range high. Now with that, we have got now another 7-day period where we would need to see the price sustain above this trend line to validate that we get that positive momentum shift. So unfortunately, we are now here waiting another 7 days. So we have another 7-day period to see how that closes. Ideally, if we close anything above where we are now, any weekly close above 59,145 should do the trick next week in closing above that trend line. Now we do know interest rate data is coming. Let's take a look. In 2 days and 17 hours, smack bang in the middle of that 7-day period. So that is going to be a massive, massive factor in potentially making or breaking that weekly close. But it is a level of absolute significance we need to close above. Taking a look at this macro structure, again, if we apply a measured move, the range high to the range low, the width of the channel applied to a perceived breakout point, that will give us a rough understanding of where we would expect Bitcoin to move towards if we were to break above that downtrending resistance. We're looking into that $80,000 region if that does occur. Moving over to a daily chart, we can see the daily chart over here, a perfect and much more clear representation of these trend lines we are watching very, very closely. First and foremost, we are watching our range low trend line, our descending channel support level, our range high resistance, our descending channel resistance level, and of course the mid level of this channel, which is going to be our trigger point. As you can see, Bitcoin has come up and retested this level again over the past few days. We are looking for a break over this region for a continuation to the range high. Again, if we are able to close here and above on the weekly, we will get the positive momentum shift. We're very likely to see that move upwards. On the bearish side, for Bitcoin to invalidate the bullish momentum, okay, which is developing, and the bullish consolidation, we would need to break underneath this downtrending low, this horizontal support lining up with 52,000 at a peak on the VRPV, a drop below that region on the daily, a daily candle close below that horizontal support level, that diagonal support level, sorry, should be sufficient in invalidating the channel of which we have been developing over the past 200 days. I'll say it again, for us to invalidate the likely scenario, which is a directional continuation up and through, okay, this is the likely eventual scenario. For this to be invalidated, we would need to invalidate the downtrending support. This level of which we have held onto for a very, very long time, 200 plus days, we would need to break below. And for a level of that significance, a 200-day long level to break below, we would need to see a sentiment shift. What can trigger a sentiment shift? Well, we got it right over here. Interest rate data. So we do have a potential trigger this week that could completely shift the expectation for Bitcoin if we see the market move in a direction or the interest rate data come out in a way that was not anticipated for it to occur. That is very, very important, guys. So this week is a week of massive significance, not only because of the weekly candle close for the RSI, not only because of where we are for Bitcoin, but of course the importance of that interest rate data and the potential implications that could have on Bitcoin's price action. So that is the daily, guys. Let's talk about worst case scenarios really quickly, and then let's jump into the short-term price action. This is going to be our weekly chart. We can see our weekly chart right over here. And the weekly chart is actually quite important. As we can see, we are retesting the Ichimoku cloud high point. This is the highest band, okay? The upper band of the Ichimoku cloud. What we have noticed historically is that breakdowns, okay, of the upper band of Ichimoku cloud. Notably, we had a break in right over here, results in macro downtrends. Okay, now if we look at the point at which the macro bear market resistance breaks, from that point onwards, we remain above the clouds until we finally break into it. We enter a macro downtrend. So we are above the clouds. We are technically in an uptrend. We are currently retesting. The cloud lines up with the downtrend diagonal resistance, meaning if we were to drop back into this $52,000 region, we would be dipping into the clouds. A weekly candle below would confirm we are now entering a high time frame downtrend. Bitcoin doesn't really have a lot of movement room here until we do run the risk of entering these macro downtrends. There have been warning signs already on the 3-day chart. If we look to the 3-day chart momentarily, we can see we have already had some warning signs of breakdowns of the 3-day Ichimoku cloud. We have seen breakdowns on the 3-day Gaussian channel. These are warning signs. We have still managed to maintain above the descending channel low, which is prohibiting Bitcoin entering a macro downtrend as we speak. But if we do fail to sustain that level, these warning signs will turn into massive sell signals and we could potentially see macro continuations lower. So Bitcoin is in an uptrend, but the bearish validation over time, as per the consequence of us pushing sideways now for 200 days, is getting closer. It is creeping up and up and up, and we're getting very close to that invalidation point, but we're not quite there yet. So the bears are almost stepping in, almost taking macro control, but they haven't done so yet. We are still in this consolidation. We are still in the confines of this channel, and while we remain in this consolidation, the possibility for continuations out of it toward the upside are possible. Moving on, let's jump into the short-term price action. As we can see, there is one key level we are paying attention to, a level that trumps every other level right now, and that is going to be this uptrending diagonal trend line. This uptrending diagonal trend line is a trend line we have now been above since the 9th of September. This is a weekly trend. This is basically the last week of price action. One full week of price action right over here, represented by our trend line, the lowest point of which we have retested. While we sustain above this trend line, we are expecting continuations towards our next high point. And our next level of resistance is sitting in that 61.3 to 61.7K region. If we look back over here, we broke above that resistance, we continued into that high. We are expecting a similar reaction continuing into that high, provided this uptrending support is able to sustain. If we drop below this uptrending support, we do run the risk of coming back to retest these low points. As we can see over here, we retested these low points many times. We could come back down to retest these low points, but if we do retest those low points, we are retesting those points from a position of weakness. Moving into rate data, which could increase the possibility that we actually see extended corrections back down to those daily lows. So I would not like to see this uptrend fail to hold. Ideally, we would want to see this uptrend sustain moving into rate data. We would like to see Bitcoin move upwards, and then we could see that correction, or we could see that continuation higher. But for now, we are watching that trend line. If that trend line does break, that is going to be very worrisome, particularly as we said, we are moving into mass news events where fear does generally take hold of the market, particularly based on historical performance. Moving into interest rates data, we do generally see these drops in the market. So we do have to manage our risk very cautiously moving into the next few days of price action. I always say, if you're a new trader, or if you're just trading news events, you have to understand your edge as a trader is very low in these news events. The day is building up to news events and on news events themselves. It is far better, and the majority of people will do so much better if they literally just stop trading for a few days. And if the people who are trading need to start to reduce their capital. I know I do. During news events, I stopped trading altogether because I know, why would I trade during this news event, or why would I trade moving into this news event when the probability of success for my strategy is significantly lower than when outside of news event. You're shooting yourself in the foot, or you're taking a lowered probability trades for no apparent reason, unless you are accepting of those conditions and accepting of the risk trading into news events comes, and you are managing your allocation of your capital and your exposure efficiently, knowing of the risk, then you can trade. But if you're doing it willy-nilly, if you're doing it blindly, if you're doing it with no adjustments whatsoever to your basic trading plans and capital allocations and risk management, you are really setting yourself up for a rough time if the market moves against you. So keep that in mind, guys. Manipulation is rampant, algo trading is rampant, hedge trading is rampant. All these things are trading against you during these events. Even the bloody media is posted against you during these events at a massive amount. You really need to be on your wits. So on the short-term price action, I do not expect this trend line to break. It could break. That is a real possibility. We have seen some momentum shifts over here. Notably, this RSI trend line has broken down, which, as we know, going off how a momentum strategy, this would be a very strong indication that we are going to potentially see a retest of this trend line or even a breakdown. This is a very big warning sign. This is a worrisome thing to see. But we do have to trust that this weekly trend is going to sustain as support is support until it is not. And until we break down, we are technically at support and we are expecting continuation. As momentum can flip back positive, okay? Much easier than these historical trends can just break down. So we do have to be aware of that, guys. Pay attention. I would not be too... how could I say it? I wouldn't be too focused on the short term this week. I wouldn't be too overcritical or over-analyzing or worry about every single time it'll move. The market is going to move as it always does. There is going to be more volatility. There is going to be more emotion. It is best to sometimes just zoom out, let things happen, let things develop, and then just react, okay? So don't try get too analytical about it. Don't get too critical about it. Understand that in 2 or 3 days' time, when the rate data has passed, the outlook is going to be significantly more clear than it is right now. Anyway, guys, thank you for tuning in. Have a fantastic day. We'll catch you in tomorrow's video. See you then.